Okay, welcome everybody. It's just gone 10 o'clock and welcome to today's webinar from Emoji Trading. This is the fifth and final webinar in our Order Flow Suite version 3 series that we've been running throughout August. So thanks for joining us once again, especially coming up to a holiday weekend for those of you in the US. Today is going to be a little bit lighter than some of the other webinars which we've done. What we have really done in this series is kind of gone from ground up introducing version 3 and a lot of the new features within the order flow suite. And we've looked at individual indicators. We've used these to explain both order flow concepts and also some of the visualization features and advanced analysis features within the order flow suite. Today is going to be more kind of application led. So what we're going to do today is have a walk through the indicators. I'm going to go through some ways in which I use them personally in my trading. I will also have a good opportunity for some Q&A around any questions that the previous webinars have either left unanswered or that they've raised. So it's an opportunity to be a bit more interactive, and I'm going to go through some ideas of trading styles and ways in which you can, realistically use the indicators every day. I'm not advocating that these are the best ways or the only ways. I'm going to give you a bit of an insight into my personal style and way I make use of the tools. So what I'm going to cover is how I use the indicators for higher time frame analysis. I like to refer to this as my pre-flight checks. And my aim from this is to give myself a bias for the trading day or even the week ahead, and also, just to get a sense of levels that may be important. Then we'll dive down into sort of session view. I very much believe that we should always start top down. Many traders will, pull up their fast chart, their 5-minute, their 4 range, their 4-tick reversal, 8-tick reversal, whatever, just pull that up and blindly start trading. And then they wonder why they get it wrong. It's because they don't start from the top down. So once we've done our pre-flight checks, we can start to see how we can use the order flow suite to identify targets intra-session, and also work off the order flow events that we come across. We'll then go even faster. We'll look at how we can use features of the suite for our entry triggers. And if you're a scalper, or if you sometimes scalp, then I'll show you how you can use some of the features to assist with either pinpointing your entries or for scalping if you want to build up some quick equity, or if the market's ranging. And we'll also look at how you can use some of the order flow suite indicators to deal with things like congestion areas and when the market's a bit directionless. We saw this in the run-up to the open today on ES, how you can maybe look for clues as to which way we're going to go. So we'll spend a lot of time on the charts. Let's go and have a look at some charts. Okay, so what we're going to start with is some high time frame analysis. What I'm looking at here is ES. This is set up to chart each session. The dark bands indicate the overnight session. The less dark bands indicate the day session. Now, that's not a standard way of looking at the daily chart in Sierra Chart. The way in which I do that is within my chart settings, I'm running an intraday chart, but my chart period is set to 930 minutes. Now that minute count is the length of time of the evening session, and I'm forcing it to do a new bar at the session start. So this is quite a neat way of giving yourself a view of what happened overnight, what happened on the previous day without using a daily chart. Obviously, if you're trading a different product, you need to be looking at the duration of the evening session time. CL is going to be different, the bonds are going to be different, but you get the principle. The evening session is always going to be a longer period of time than the day session. So we set the minute period to the duration in minutes of the overnight session. And because we say new bar at session start, Sierra Chart will force the creation of a new shorter candlestick. So that's the rationale by which I'm creating the candles within this chart. So what I like to do before each trading day. I will check for macro events in the day ahead or for tomorrow as well, just to get a sense, is there anything happening in the world, which might give me a clue as to when things might get volatile or when things won't be volatile because people are waiting for news. But I want to see the big picture, and I want to look at the quality of what prices are too high and what prices are too low. The way in which I do that is actually pretty simple. I use Price Rejector Pro, and the way in which I set this up is I'm not looking for an imbalance. So that means I'm only looking for exhaustion at the end of the bar. The thought process I've got is if we're at a high level and we're running out of buyers, it might be too high. Conversely, if we're at a high price level, so the extreme of a bar, and I'm not running out of buyers, the market's telling me it's not too high. I like to keep things really simple. But what I do is I put the exhaustion and absorption filter into exhaustion and consistent absorption mode. So I'm not looking for reversals, but I'm letting the computer tell me at high prices, if I'm running out of buyers and all of that buying is being absorbed by stronger passive sellers, that's giving me a clear sign, okay, that level is deemed by the market at that moment in time to be too high or too low if we're at the bottom. I set the visualization to dynamic. I'm interested to see how these levels hold over time. And I use the order flow analysis. But I'm not doing anything in terms of filtering on price reversal or anything else. It's just a way of me being able to look back across this pseudo daily chart where actually I've got, here's it overnight. So this is last night, here's yesterday's day session. So before the trading day starts, I can see that on the overnight session, before this candle printed, the low was too low, but the high was not too high, based upon price rejector. So I start to get a sense of bias. The orange dotted lines are unfinished business, and I've got this running in a pretty loose way as well. I'm not filtering on bar direction. I'm capturing a lot of data in here, so I'm less bothered about bar direction. But I want to see, for a given candle, where did the auction not end? Now, bar direction is important. If we're auctioning down, like on this candle here, and we have unfinished business at the extreme of the auction in the direction in which the auction went, that's a clear sign to me it wasn't low enough. And you can see, sure enough, we went lower. Same thing again here. If it's at the wrong end zone, look at this candle. This is a down candle, and I've got unfinished business at the top. I'm not regarding this so much of a target. You know, we clearly closed away from here, but it's an interesting level to note for the future. So I've got unfinished business set up to extend until future intersection, because these levels do get remembered. But certainly it is interesting to me if we've auctioned in direction. Now overnight we auctioned up and we had unfinished business at the high overnight. So again, I can start to get a sense of bias. Now at the end of the overnight session, it told me that the low was too low. We can see the price rejector, and I've not too high. But okay, in principle, that's nice. The low is too low, the high is not too high. It can give me an upward bias. Were it not for the fact that we're entering a holiday on Monday, if I look at the trading that's gone on over the past, month effectively, we can see we're forming a bit of a range. So thinking about what's coming ahead on the holiday, this is interesting to me, but I'm not holding out any great hope today that we're going to go and resolve that unfinished business. I'm still using some macro context, the fact we're ahead of the holiday, to qualify what's going on here. But I think you get the principle. I'm looking to understand the edges. Are edges too high or too low? If they're not too high or too low, great, it's giving me a bias. So this is something I do every day and also at the weekends. I want to get a sense of the week ahead and likely scenarios, and also the day ahead. I also put cumulative delta on the chart. I've got just over a year's worth of data in this chart, and I'm not resetting the cumulative delta. What I'm looking to do with this is just get a sense. So I've been asked, can I show the unfinished business settings? Sure, I'll just bring those up. So here are the settings for unfinished business. I'm not doing any filtering. I want to look at every bar. I'm using extend until future intersection. I'm using, in fact, there's another evaluation going on. We're not filtering on price direction. So it's very simple usage of unfinished business. The main benefit of this is I'm saving screen space. I could put a footprint on here for each candlestick and read the same information, but I can zoom out and get a lot more information very easily on, this only full HD display, which I'm sharing. I can really start to get a picture of what's going on this kind of pseudo daily chart, and it gives me a sense of where am I in the market, as well as where am I in my preparation for day ahead. Now back to the cumulative delta. What I'm looking to do here, and this is quite useful in this range, we've been in a range for most of the month. Now we wouldn't have known we're in a range till about here, realistically. But I can start to get a sense of how is the pressure forming. So when we came down to this low, then it's pretty clear that at this low, third time we've touched it, and look at how we're respecting some previous levels of price rejector to exhaustion and absorption, the buying pressure is rising. So that would have set us up around here to think, okay, we're near the low. Do we expect a breakout? No, we're likely to range. And sure enough, we go up and look at the levels that we've played with overnight. There's a historic level that broke there, but not expecting anything dramatic to happen today. So cumulative delta, it gives us a very simple assessment as well when we're range bound of where might we be going if we're in a range. And of course you can look for divergences and this kind of thing. So we make a lower low in a trend and cumulative delta is higher, we can start to be suspicious. But this is what I like to think of as my pre-flight checks. I think it's very good discipline to look at the big picture in some way every day, but we can use order flow to find some levels, give us a sense of bias. And of course, our bias can change as things play out during the trading day. But let's go in with an opinion, and if we've got no bias, great. That's valid as well. We can be open-minded as to what else we might encounter. So that gives us bias. Last week we covered how we can also use the daily charts. This is a one-day chart. I'm not doing anything particularly clever in the sessions, but I'm using the small prints indicator to highlight when we've got a zero print within the whole day's trading. So a zero print can be a sign of aggression or stops being triggered. It means that a load of volume piled in, the book got swept, and there wasn't enough opportunity for there to be two-sided trade within the market at that time. And I'm making use of the dynamic mode on emoji zones, evaluating the order flow, but I've got a lot of cycles going on. So rather than ending a zone after it completes one cycle of, in this case, new demands, continuing demand, exhausted demand, that demand turns into new supply when it broke, and that would have ended it on this candle. But actually, I'm allowing it to continue. I'm putting 4 cycles in here. And this allows me just to keep track of some of these hidden levels over time. Now, these are levels, they might coincide with the arbitrary value areas, POCs, but actually, here's real data based on the volume. So whether or not somebody's volume came into the market as a result of it being at a pivot point or a fib or a value area boundary, what we know is that somebody committed themselves sufficiently for there not to be two-sided trade. We left a zero print, and a zero print in a thicker market like ES, to some extent CL, is quite significant, and we will find these levels act as potential stopping levels. I've broken this out on a separate chart for purposes of the webinar, but you can combine these things on this pre-flight check type chart. What I'm also doing this chart, and we went through this in more detail last week, but I'm making use of the fact that I can populate the emoji zone data onto the supply-demand subgraphs. And what that allows me to do on another chart, so here I'm getting closer to the action, it's one of my trading charts, by using the Sierra chart study price overlay study, I'm able to pull in from the daily chart the small print study and populate a few subgraphs and only want to see the new untested zero print levels. And now I can overlay them on a chart where I might want to be closer to my execution. So this allows me to save screen real estate. You know, it can start to be very distracting. You get information overload and your brain starts getting confused about should I evaluate X or Y or Z. So by pulling in higher time frame information on what is a rare event, so zero print on daily charts pretty rare, I can use some features in the order flow suite by publishing the emoji zones into subgraphs and then using Sierra chart study price overlay to pull them in. Now I've actually got some context of something that the indicator is showing me. I'm not even coloring this. You know, if it's above me, I know it's supply. If it's below me, I know it's demand. And I can regard these as potential exit points. And, you know, one of my key mantras is if we don't know where we're going to exit, then how can we justify entering? Or potential entries. Personally, I like to see these things as areas to get out, and then it gives me potential opportunity to go and get in. Now, you know, there's more context to stay than just what we've got here, but immediately, in other indicators, I can read I've got a price rejector, the top of this candlestick and the top of this candlestick. In fact, we've got our exhaustion, we've got consistent absorption, we've got aggression. That allows me to think about potential entries. I can evaluate my risk. What do I compare my risk to? Well, I don't hold much hope out of it going below there on its first move. But if I can see what an entry around 16 down to 9, so what, 7 ES points versus 1.5 points of risk, yeah, that's not a bad candidate trade. Just based on the fact I know somewhere I might be able to get out and there's a price rejector opportunity to go and do it. So, you know what, let's make a mental note of 9.5, one tick ahead of it, and let's see what happens through the webinar. So that's how I start to use high time frame stuff. My pre-flight checks to give me a bias, and also to find some levels that might be of interest during the day. And note, these are not arbitrary mathematically calculated levels. I do consider TPO, I do consider volume profile and fibs because everyone else is looking at them. I don't take a view on them, but I'm interested to know where they are, but I'm interested in looking at the order flow through the emoji indicators when we are at those levels. So I aim not to clutter my chart with too many horizontal lines. We can just trade off the order flow, but I think it's neat to be aware of where are the areas that everyone else is looking at, because then we can at least have some awareness of if we're in no man's land, go off and make a cup of coffee. If we're near it, we can start to pay a bit more attention. But these zero prints off a daily chart can be, you know, really useful. So what we'll do, let's remember it on this one. I'm just going to put a little line there. Let's bookmark it, and let's see what happens in the next half an hour or so, and if we get down there. So that's high time frame analysis. Let's move on to intra-session targets and events. Now, something which I've mentioned through the previous webinars is I find a lot of traders are of the belief that, you know, the faster my chart, the closer to the action I get. Now, when we are evaluating order flow, we are interested in looking at the volume that's happening at each price. And to my way of thinking, if you're on a crazy fast chart, you know, 1 minute, 30 seconds, 3 range, we're not capturing much volume. We are extending the action out horizontally. And okay, we can still read it. We're actually going to be thinking more about delta on each bar because we're taking the volume at a given price level and stretching it out over time. But I think it's much more revealing to be looking at the volume at each price level. And the chart that I focus on is actually a 30-minute chart. This is pretty close to one of my regular trading charts. The reason being I frankly don't have that much time to trade, nor do I want to spend 5 to 6 hours a day trading. I look for some very specific market profile based setups based upon some quant and stat analysis I've done, because it means that I can look at the screen at certain points during the day and look for an opportunity to some known targets. Now think back to when we were looking at our pre-flight checks. We were considering the quality of the edges of each candle in order to get a bias. this is pretty much the same thing that I do. So here's my open at 8:30 today. I do run a CPO just to get a sense of the day type and the shape and single prints, but actually the 30-minute candle is also a TPO. You know, we can kind of visually crunch this together. And I'm doing the same analysis. I'm working on the basis that certain things happen most days more often than not. You know, the market will open, it will make a range in the first hour, the initial balance. It will break that range to a greater or lesser degree. It will go on to a level, then it will come back. It's rare it goes on and on and on and on. The trends days don't happen every day. It's 1 day in 5, 2 days in 5. It might find the other end of the range, the initial balance. Rare on ES for it to break both sides, but we can actually look at the quality of the break in order to assess that. So given that many people are trading off market profile and TPO, then the 30-minute candlesticks allow me to look inside each letter session. Here's A, here's B, here's C, and I can use the emoji indicators to actually look at what is the quality of the edge of each 30-minute rotation. Now, today is, okay, we're going down, but it's not going to be a dramatic, fast day. It's not moving as fast as we've seen over the past week or two. But if we look at how we opened, the top of A period, we opened here, we went up by a tick and we auctioned down. And the indicators which I've got on here are simply price rejector. I've got price rejector set up a little bit tighter. I'm looking for the imbalance in the price rejector. So I want to see exhaustion, I want to see consistent absorption, and I want aggression. So I'm using price rejector for reversals. I'm also projecting it out. I also am using the Absorption Pro indicator to highlight contested levels. So this is where we've got big fights between the passive traders in the market. These can happen at arbitrary levels like TPO or volume profile levels, or just somewhere where people are playing. So I want to know where people have traded, who won, and then whether or not that holds or not, because this represents some real supply and demand in the market. In terms of what I'm looking for, as we opened today, I see, okay, we had this odd price rejector on the way up overnight. Let's remember, on the way up overnight, we had unfinished business at the high, the overnight high as well, which we saw on our daily thing. So that maybe gives us a target. Market was grinding up. We auctioned up a bit. We had this price rejector. Look at where we traded at the open. We traded in what was this price rejector demand, and we went below it. So we actually, because we closed below it, we turned that demand into supply. We traded down into this big area of historic new supply. That will be from price rejector. This is new supply. The more transparent bands, new demand. The more transparent bands are demand that's been tested. So on our auction down during A period, it doesn't really surprise me that this level stopped us. It didn't relate to any particular structural level. And that's the TPO POC today. That's developing. That was a contested level, also showing demand. But it's telling me immediately, if I think about here, okay, I know I've got some historic demand here. I've got some supply here. I'm not expecting it to be that dramatic a day, although it seems to be falling down. And, we're moving down, down, down. But as B period opened, if I was thinking that a range extension is a likely concept within market profile, so B period will trade to or beyond the edge of A period. If you put me in the middle of A period and I have to make a bet, actually I'm feeling a bit neutral today. I know I've got supply above me. I know I've got this demand that's been held. So at least I know where my edges are. I may be a bit harder to form a bias based on how today traded. But to answer one question that's come up, what do I mean by the quality of the edges? I'm always looking at the session, and then whatever auction period I'm looking at, I want to see, does the order flow tell me that we are too high? or too low. Now, actually, as I read this one, sure, we traded into a historic area of demand, but this particular auction didn't tell me it was too low. So while I might be wary and think, we've got some work to do below here in order to get through it, the fact that the top of the candle of this 30-minute auction has told me it's too high because we've broken something that was too low, we've traded an area here, I maybe have more of a downward bias. So I'm simply using price rejector on this 30-minute chart to evaluate the edges, and I'm using Absorption Pro to highlight contested levels. Got some other indicators on here. A lot of this is structural stuff, value area lines, for TPO, volume value area lines, the two footprints for the session and the delta profile. I'm also using small prints. So we spoke about how a zero print can be something quite exceptional on daily charts. It's also quite exceptional in a half-hour time frame. So I'm using the zero print indicator, sorry, the small print indicator, on some very simple settings. Let's just bring it up. I've got small prints here. I'm using small prints to identify zero prints in the bar body of a 30-minute candlestick and just fix projection. So I just actually want an orange block, whether it's demand or supply, just to draw my eye to where we've got a zero print. On the 30-minute chart, I can look back 3 or 4 candles. I'm not trading that much during the day, but this area gets interesting to me. I'll also show you how we can start to use this stuff for scalping. So let's just have a look at what else we've got going on today. You can see here I've also got unfinished business. We've got unfinished business at the low of today. We auctioned down, and we've got unfinished business. So now that gets me interested in potential short. We can start to get a bit close to the action. We wanted to talk about intra-session targets. You know what? I've got a nice target here. I've got this unfinished business target. We are in sim mode. I've got a price rejector up here. We're a bit late to the party with some big selling absorption here. I can start to think, you know what? I might be happy to take a short trade based upon the existence of unfinished business. Let's get out a little bit ahead of it. We could have our stop just above what we've got here. And the unfinished business, I see unfinished business at the edge of the day, supported by the auction direction. It starts to get interesting. I've got somewhere where I can think about getting out. That allows me to calculate my rewards, 22 down to 14, so up 8 points, just under. My risk, we were late on this entry. As this was forming, we'd have been looking for things. But even with that poor entry, I've got quite a favorable risk reward. So it's very interesting for me. If I've got a target and I can see that the edge of where the target is tells me it's not too low, then certainly I'm interested in potentially trading that. We'll leave this going and see how it plays out. And we bookmarked, what was the level we bookmarked? It was somewhere down here, wasn't it? We bookmarked 9.5. So we know there's a zero print below us, which is also overlaid on this chart. It's actually an area of demand that's exhausted. We'll see if this holds. We'll see if we get back down here during the webinar. So once we've found targets and we can look at opportunities to trade targets using the order flow events, then actually we need to be thinking about what are our triggers for entry. We know that these 3 prices are pretty good. I'm using the pullback column within the footprint and the sell imbalance as we auctioned back down. Could have been a good entry trigger. I could have entered, so I saw this forming. I could have put a limit order if we traded back up here. I could have put a sell stop below it and let the market take me in. But I'm also making use of the advanced pullback analysis in a couple of indicators. So if we see this pink band, which is appearing, this is Absorption Pro just set to show what's happening as we auction back from the extremes. and I personally use this as an entry trigger. I'm using these very long candlesticks, 30-minute candlesticks. So it interests me in the volume as we move away from the edge. If within the trading here, I start to see absorption, or I also use price rejector. So if I get a price rejector condition at the top of my retracement, or if I start to see absorption, and what we may see, there was absorption flashing up here before I started talking. It's now flashing here. So the passive sellers are the areas at which they're absorbing aggressive buying is getting lower and lower. So if that's telling us that aggressive buying is being absorbed at lower and lower prices, we know strong passive sellers are selling at lower and lower prices. The market's moving down. Now, that is price rejector at the bottom of the pullback auction coming in. This is very dynamic. We're auctioning up and down. We're rotating across different time frames, different fractals. So I'm not surprised to see this happening, but nothing has fundamentally changed in the premise of the trade in which we've got going on. So I'm quite happy to be holding this trade to my target. But I use the pullback feature on a couple of indicators to kind of time my entries, finesse my entries. So let's just have a look at how I've got the studies set up. Now, if I go, I've got pullback absorption, I've renamed the study. So this is Absorption Pro. I simply have this set up to do pullback evaluation on the current bar only. It could draw an emoji zone at the level. I'm not interested in that. I just want to use this as a trigger. And I have the emoji zone visualization set to pullback only. I'm not doing any other analysis based on absorption with this indicator. I'm also doing the same thing with Price Rejector Pro. So I'm using relatively strict conditions, exhaustion, consistent absorption. We look for aggression. Sorry, I'm looking at the wrong one. That's it, pullback PR. So I'm only looking for exhaustion. I'm not looking for consistent absorption. We're looking for aggression, looking for exhaustion, and as with Absorption Pro, I only want to see it on the current bar. And that is how I'm getting these indications intra-bar, even though it's a very slow candlestick, and I will tend to use those to finesse my entries. So that's kind of how we can use some features of the order flow suite for our entry triggers. We can use that same principle for scalping. So here, I've got a faster chart. This is a, what's the chart period on this? It's the range chart. I've got a 10-tick range chart going on. And we'll use this to discuss scalping and also what we do in order to see what's going on with congestion. If I'm not clear on what's going on the slower chart, I might start to look at this faster chart. Although, for many people, 10-range chart's not that fast. This is set up in much the same way. I've got price rejector looking at the pullback, so the auction within the auction on the 10 range, and I've also got Absorption Pro doing the same thing. Now I can see here lots of positive delta, this all being absorbed up here. I might use this situation to scale in. So for as long as I'm in this area, I'm quite happy. Someone's holding it here. We can just see that there was Absorption Pro underneath. But if I'm in profit and I'm thinking about scaling in, then I may well look to the faster chart and also use Absorption Pro and Price Rejector on a pullback to time my entries. What I aim not to do is primarily trade off the fast chart. It's a really good way of getting too much information and over trading. I try to be very strict and think that I need to do my pre-flight checks. I need to trade using, for me, some structural context, which is the 30-minute chart. And then if I'm unsure or I want to finesse my entry, or if I'm thinking about scaling in once I'm well in profits, I'm trading with the profit generated from the trade, I'll look for the fast chart and start to trade off that. I'll also use the faster chart potentially for scaling in or scalping based on zero prints. You can see I've got these highlighted here. What will happen a lot of the time, just bear with me because we've got somebody who is spamming the chat, so just going to throw them off. Okay, they've gone. Right, so what I'm also highlighting is zero prints. Now, the way in which these are being highlighted in this chart is when they exist at the end of the candle's formation. What you do see a lot of the time, certainly in ES, but we may not see it today in this, we will see zero prints, but sometimes they'll form intra-bar and they'll get filled in. If you're quick, you can aim to front run these zero prints. And this can be a very neat way of scaling in. I only recommend you do it if you're in a position trade and you're in profit, or if you're really got a scalping mindset and you see it and you get out with maybe 3-4 ticks. But ES doesn't like to leave gaps. It's rare when it does. So here we can see this one got filled in. You will see time to time. Now this one filled in here, but we do get opportunities that get highlighted where a zero print will form. We trade up a couple of ticks, the market hovers and it swings back. So if you're quick, you can sometimes see this being highlighted with your orange small prints. We front run it with a limit order. We will actively manage the trade. If we go too far beyond it, we don't want to get out. But if you've got a bias about, we're auctioning up, I've got a zero print here, you can front run it, and it can be a neat way of scaling in. But you can also, and I recommend, don't scalp if you don't have a bias, otherwise you're just guessing. But if you do have a bias and you want to scalp, then the pullback analysis can be a very neat way of finessing your entries and getting in with very tight entry that allows you 3-4 tick stop, worst case. And you can really play with trading vertically and scalping within this vertical range. Now, I also mentioned I was going to talk about congestion areas, and we had a good example. It was pre-market. It was about midday here. So let's see, it's run up to the open. Here we go. Hopefully we're going to get enough width on this chart in order to see it. What I'm going to do is close the trade window just to try and get a bit more space on the charts and see what went on this morning. That was yesterday. Here we go. It's today we want to look at. Let's just scroll back a little bit. Here we go. So we had quite a bit of congestion in the run-up to lunchtime today. There was our unfinished business at the high. I don't have unfinished business on here, but if I did have the unfinished business on here, it would have actually told us that this was what we call a trade away from unfinished business, because this unfinished business had maximum buying absorption. We also, see we traded down, so we didn't auction up and go away from it in this particular 10 range view. We auctioned down and it was absorbed. So while this may well be a target, in the immediate term, we want to trade away from it because the level was absorbed. But once we start to get stuck, over a period of an hour or so, Delta can give us a really good clue of what's going on in directions. Now, I've got a table of Delta and Cumulative Delta along here. We can see as we went along through what, a 15, 16 tick range, I guess. We had negative Delta, negative Delta, negative Delta. The negative Delta reduced down here. It wasn't that negative. Of course it wasn't. It was up there. But if we are looking to get a sense of how are things playing out when we're stuck, we can use delta divergence to give us a clue of where the edges might be. And the way in which I use delta divergence, let's bring up the settings, is on a short chart like this, where I'm not looking at anything contextual, I will actually look back across bars. So if I get stuck in a range across 4 bars on a 10 range chart, then let the computer tell me something. I look for the divergence to be opposing. This is quite strong. So I want to see negative delta on a up bar, positive delta on a down bar. But the valuable thing for me is highlighting sequential decline. So what I'm doing here is, if we have a sequence of reducing or increasing deltas, so you see we've got less negative 3 in a row, less negative 3 in a row again, then I want to know about it. So this is telling me that although we're selling, the amount of aggressive selling is becoming less aggressive. So what we're seeing here is actually exhaustion. If we're stretching the volume out horizontally and seeing the aggregate through the delta. So sequential decline of delta can be quite a neat way of showing us where are we stalling and what's the direction. So okay, at that point it was too high. Here we're looking back over 4 bars. I don't think price offset, but we're identifying the decline here. If I was looking at this range, because I can interpret that unfinished business, or the indicator can do it for me, I would have entered the day probably with more of a short bias and a long bias in this range, notwithstanding the fact it's a tricky day in the run up to a holiday. So we can use Delta Divergence Pro to start to look at what's happening in delta without interpreting the numbers as we go across a range, in a similar way to the way in which we're looking visually at the cumulative delta on our pre-flight check chart. So that covers off congestion areas. Christine has asked, how do we determine if an edge is too high or too low? I'm going to go back to my trading chart, my 30-minute chart. Look at that, we got stopped out. That's what happens when you don't pay attention to your trade. So what we're looking for is the presence of an order flow condition as an edge. So maybe we can find some cleaner examples somewhere back here. Let's have a look. Think. Okay, this candle opened, auctioned down, went up. It's an up candle. At the bottom of it, we had a price trajector, this green band here. Now, okay, that was our 8:30 candle. Haven't thought about anything else on the bias for the day, but we're always looking at, on the edge of our auction, and 30-minute is a decent time auction, do we have any signs telling us it's too high or too low? And kind of looking at the probabilities of which side is going to break. So if we're inconclusive on either side, we have no bias. Here, the market told us this was too low. It didn't tell us this was too high. We did actually auction up to a big area of absorption. This looks like it was the maximum absorption in the candles. No coincidence, we stopped here. Now, if we did have a short bias from this, we would start to expect a challenge here. On that day, we actually broke it, but we're constantly looking for, given that on any given day, the market will, let's just draw this, the market is going to open, go up, go down, let's say, here's our first hour. We want to see, is this too high or is this too low? If that's too high, brilliant, we can form an opinion. If this is not too low, we've got no sign of what's going on, we can start to assess what to do. And you'll hear, pro traders, prop traders always talk about, trade the edge, trade the edge. Well, what we're looking to do is assess the probability of which edge is stronger. We can trade an edge in different ways. If we know that's too high, we could look for an opportunity to trade back to it, but actually we want to look for an opportunity to trade to it when we've seen something that's too low. But we're just looking on multiple time frames. If we're going to consider how high is high, how low is low, then let's look in the volume for the clues that are there in order to ascertain on the big picture what prices are too high, what prices are too low. As we zoom in, we can sell again. Okay, here we're looking, to trade between levels, but what clues can we find to tell us something is too high or too low? Now, it is worth reading up on the web. There's various bits of research about how ES and CL play out during the trading day with things like market profile structures and initial balances. But given that it's rare that the market moves in one direction only, we we can start to understand, well, okay, if the initial balance is broken and we don't expect to go in one direction only, after it's broken, we want to look for signs for, will it go back there again, or has it gone far enough? So the fact we broke our initial balance and we've got an unfinished auction at the low, we know we've got the zero print below us at 9.5. This still gives me a short bias on the day. The quality of my entry, well, I want to be patient, but the higher I go in order to sell down there, the better my risk reward. So we're just assessing, probabilities of what I refer to as our inside out trade, or once we're outside a range. So if we retrade here, now I'm starting to get very interested as we found maybe a structural level, or we've broken this at some point in the day. I'd start to be using things like Delta Divergence. So it's here on this chart, Delta Divergence Pro, to see, is the market telling me that beyond here, are we too low? A Delta Divergence can be a signal, the Price Rejector Pro can be a signal, peak absorption can be a signal. So to answer Christine's question, how do we determine if an edge is too high or too low? The order flow indicators will tell us. The reversal-oriented indicators, so that's Price Rejector Pro and Delta Divergence, will tell us if something is too high or too low. By extension, if it's not too high or too low, we can expect to go back there again. And trading can, really be that simple. If you are fussy about the trading opportunities that you are considering, and the psychology here is, why would you risk your equity for anything that is poor quality? Then we are just looking to assess what is the probability of one side or other side of the market breaking or holding, and that gives us our bias. So that was really today's walkthrough of the sort of way in which I use these indicators in my daily trading routine. To kind of recap about the key indicators within the order flow suite and how you can use them. If we're looking for reversals, we can utilize Price Rejector Pro. So here we're looking vertically, or we can look at Delta Divergence Pro. And the way to think of Delta Divergence Pro is price has made a higher high, but the amount of buying is less than it was before. And you start to read these things out in plain English language, and it's pretty clear. It tells you kind of what to do. So if you're going to start looking for reversals, these are two indicators to really utilize. If we're looking for absorption, so this is when stronger passive traders are absorbing and overwhelming all the aggressive activity. Absorption Pro is your go-to indicator. And the reason passive trading is important is it's my belief that the people that are trading with serious volume, so commercial-oriented volume, and they've got the volume to move the market, they have to execute their business in the main using limit orders. So we can start to see the activity of these strong passive traders by using Absorption Pro. Aggression, however, so aggressive market orders or stops being triggered, we can identify that using edge zones. So that's looking at the imbalances with various levels of filtering within candlesticks. We can use small prints. So this is about the lack of volume showing us aggression. And also Delta Scalper. Delta Scalper will look on a bar-to-bar basis and show us the price levels at which aggressive trading has come in. And then for targets, if we're looking at trading back to an extreme price level, then unfinished business can be very useful for that. But it will also show us when we've got unfinished business, so price was not too high or price was not too low, but that situation was caused by strong absorption, and that is a clear signal to trade away from it in the short term. So those are kind of order flow events, and those are how we bring them to life, some of the indicators. But then features within the order flow suite version 3 that we can use to make our life easier are emoji zones. So we've got horizontal colored bands projecting out from these supply and demand events, and these will assess how these levels trade over time by looking at the volume. So you can see if a level is holding or likely to break. Now, if a level looks likely to break, we know we're not going to lean on it. We can kind of change our bias and think it's not an immediate target. We know we're going to go beyond this. So emoji zones using order flow evaluation in dynamic mode can be very powerful. We have our advanced look back analysis. So this allows you to filter out extreme highs and lows using various degrees of time. You can also put price offsets in there. So this allows you to do things like, say, on my 10 range chart, tell me if we have got an order flow condition that's happened within the last 30 minutes based upon market profile, which would be a rolling 30-minute window since the start of the session, and within one tick of the high. So you can really start to put some sophisticated filters in using advanced look-back analysis, which is available on a lot of our indicators. And then pullback analysis, my phrase for this is trading the auction within the auction. So as a candlestick retraces from its high or low, we can apply our indicators to the volume that's happened since the high or the low. And this is really neat because whatever chart period you're looking at is wrong. It's the volume that holds the reality of what's going on. So we can apply the analysis to the volume that's occurred since the price extreme, irrespective of the candle that you're actually looking at. Now, back to that point, if your chart period is wrong, in my view, volume traded at price is much more important than the speed of your chart. If you've got a fast chart, you are stretching volume out horizontally over time or tick intervals or whatever arbitrary measure you're putting in. We need to see the aggregation of volume at certain prices and look at the patterns and what's going on. So it may seem a bit alien to some retail traders, but I'd actually say pull up a slower chart, pull up a 30-minute chart, use some of our templates and some of our indicators and see how the volume really springs to life and you're getting more of the picture of the session without having to scroll left and right. You really can then start to get the mindset of how you trade using the dome or profile. And then the other thing, which I strongly believe, is if you have no exit level, then you have no reason to get into a trade. So a target could be something like unfinished business. It could be an absorption level. It could be something arbitrary, value area high, but we really want to understand the order flow at these arbitrary levels. The order flow tells us what's going on at these arbitrary levels. So if you have a bias, and if you have a bias combined with somewhere in that direction, which tells you a logical first point to potentially get out, once you've got a target, you can start looking for an entry. So I don't believe you should ever put up an indicator and go, oh, look, the indicator's gone green, I'm going to go long. If you do that and you say take profit 10, stop 5, you are going to lose money over time. You have got to think about your exits at some contextual, structural level based upon the volume that's traded. Once you can identify an exit, then you can look at your possible entry and evaluate your risk reward. You might need several entries. You might have fear of missing out and you get in too quickly, but you can only evaluate your risk reward if you know where you're going to get out first. Now, do I have suggestions on NQ and CL how to use these indicators? CL is very similar to ES. There's enough volume within CL that we can trade in a very similar way to ES. NQ, I don't trade it. It's too thin. When you bring up a footprint on NQ, then it is very rare, even on a 30-minute chart, that we see consistent good volume patterns across levels. Now, you can play games like start to aggregate the ticks together, and NQ has appeal for some people because it's $5 a tick. But if we start to aggregate the ticks together and make it $10 a tick or $20 a tick, we might as well trade ES. So my personal view, I don't touch NQ. If tick size is the issue and it's about account size, we trade the micro ES. We would chart the volume of E-mini, but set the platform up to throw the orders in on micro ES. So I don't believe NQ I don't believe you can pinpoint levels so well on NQ as you can with CL and ES. And if you can trade CL and ES, then why trade NQ if it's harder? Someone's asked, I use advanced pullback analysis to manage the trade, move stop, etc.? Absolutely. So I will use advanced pullback analysis and also zero prints to scale in, and certainly I'll move the stop. And here I'm typically looking for absorption. If I know that there's a big passive trader who is absorbing something, then I want to hide behind them. You know, when they quit the market, I'm going to quit the market. If I want to scale in, I'm going to front run the absorption. So I'll be reading the liquidity, I'll be looking at the presence of large volume and, you know, large order size within the book. But where I'm seeing that we've got consistent absorption at a level, then I will absolutely use that to my advantage, because I know where the bigger traders are. You know, we can think of this as, you know, little retail trading activity, 1 lot, 5 lot, 10 lot, with a little bird who's feeding off the insects off the back of the hippopotamus, but we need the hippopotamus in the market in order to get fed. So if we can see those hippos, then we can use them to our advantage and eat the insects, which is a really unappealing analogy. Now I've said it out loud. But yeah, advanced pullback analysis is a great way of being able to lean on larger traders. Can we share the ES chart book from today's webinar? Yeah. Once we post the webinar, we will put a link up to this chart book. It's not, for me, you know, this isn't my perfect day-to-day trading chart book, but it provides a neat chart book as a way of getting 4 or 5 of these concepts. And if you want to review these concepts aligned to the recording of the webinar, then for sure we'll be very happy to trade it. So that brings our August series of 5 webinars to an end. We'll shortly announce the competition for the person that attended all 5 and wins the Porsche 911. Oh, the internet's dropped out. I know. So thank you very much indeed for your attendance. It's very much appreciated. If you have answered our poll, that's great. I'm going to relaunch it because we crashed last time. So if you can take a couple of moments, if you haven't answered this already, just to review this poll, that would be appreciated. Recordings will be posted on the web by close of play Monday, and they'll be at our Vimeo channel, YouTube channel, also at emojitrading.com/videos. We have lots of information on our website at www.emojitrading.com. Full user guides, you know, please review the user guides. And also, if you have any questions about our software, if you have questions about our classroom training courses, or if you would like to explore the possibility of individual coaching, where we'll teach you how to read this stuff from the raw data before then applying indicators, please do get in touch. Our email address is info@emojitrading.com. But that pretty much wraps up today's webinar. So thank you once again for your attention. Please answer the poll, and we look forward to hearing from you and working with you in the future. So that's bye from me, and thank you. Enjoy your holiday weekend.